Well, hello everybody, welcome to the Strategy Lab video. My name is Alexander Nikitin. I am a professional trader and a developer of pattern search software. And in today's video I will talk about the Gartley patterns structure. I know, guys, that majority of you don't know the Gartley pattern structure. You don't know what is the type of pattern you are looking at. So what is the problem? Let me outline it first. Look at this diagram that I'm going to draw. You have an uptrend, yes, like this, and then you have this kind of Gartley. So you suppose that you have a pretty good trend continuation opportunity. You have an uptrend followed by Gartley. You have this. This is wrong. This is absolutely false. So first of all, many of you just start drawing it from wrong place. This is not a good place to start drawing your X point. This is first thing. The majority of you draw the Gartleys from here, like this. So this is wrong place. And the majority of you are asking, how far should go this retracement before the Gartley, so to tell me that this point is good, and so and the like. So these questions are asked me pretty many. This is wrong. You're looking for a wrong pattern. Go to Gartley's book, Harold Gartley's book, Profits in the Stock Market. Let's go to PDF. Gartley's book, Profits in the Stock Market. The page is this, as far as I remember. And on page 221 you will have the description of the pattern that is called one of the best trading opportunities. Yes, and on 222 you will have the diagram of this pattern, and this pattern looks this way. You can see a downtrend followed by this, followed by this, followed by this. And if price retraces back to this rectangle, to potential reversal zone, then you have a good opportunity to enter. Gartley himself describes this situation as a good opportunity to buy a double bottom, very, very close to this low, very close to the lows. Gartley himself says this, that it is a double bottom. He also says that if traded correctly, yes, it can be also a right shoulder of a head and shoulders, left shoulder, head, right shoulder. And again, you have a pretty good opportunity to buy the right shoulder, not to wait for this breakout. Yes, you are having the opportunity to buy the right shoulder, so you are buying very low. The Gartley is telling this. So before you start measuring the ratios of Fibonacci 618, before you start arguing, oh Alex, your C point is not that, your B point is not that, your ratio is not this, first of all you should learn the structure of the pattern. Learn it, and then we will talk. Okay, as I told you in the beginning of this video, I am a programmer and I am a creator of monster pattern search. It is pretty simple for me to do the back test using the historical function of that. I simply just type -1. I simply set some limitation of the XA leg size from 8 to 34 ATRs. I set the swing identification algorithm, let it be large as well. Let me place them all. Let it be small. And I set the pattern that I'm looking at. It is a Gartley. I don't want any bats. I don't want any other pattern ciphers. I don't want any butterflies. False, 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 false. Okay, and let me save it and call it Gartley or whatever. Gartley. We will do the back test on history right now, and you will see the improvement of that. Let me load the Gartley. The only difference here will be that it was small, and now we need medium swing identification algorithm. Okay, the same settings. Let me load the Gartley once again, and now it should show us large patterns. Okay, and let me switch it once again. Let me open that, another Gartley, but this time it should show us extra large patterns. Okay, and let me run one more and let it be manual, showing only Gartleys, but in case I want to draw them manually. Okay, so 5 indicators. Every one of them is running its own swing identification algorithms, scanning the market for the patterns that fit the ratios. You see that? And now let's do the back test. Guys, before I do the back test, I just forgot. Let us draw some Excel spreadsheet. So in this Excel spreadsheet, we will do this notes. If the pattern hits 61A, yes, I will mark it plus. If it hits stop loss, I will mark it minus. If it first hits 382 but then goes to stop loss, it will be -0. And if it goes to 382, suppose we do the break even, then it goes to our break even level, and then it returns back and goes to 618, it will be +0, just avoided winner. You see that? So this will be our notes, taking notes. After that we will do the calculations. Okay, let us go, starting the year January 1999. Okay, what we have here, well, so what the rule says, the rules say this: if we have a Gartley, yes, the previous movement should be either larger than that, like this, or it should be equal than x to a, like this. So let us first do it this way. We don't know if this Gartley, the previous movement, is larger. Maybe it was an uptrend, yes? So we don't know if it was a downtrend. So this Gartley should be skipped. Let's go next. This is a continuation Gartley, yes, you can see that. Let's go next. This page, the backtest will be pretty fast. We have 3 swing identification algorithm coinciding. The XA leg coincides and the C leg is different. So let me draw it this way. We have it here, then we go higher like this, and then it is obvious loser. Let us type minus. It is a stop loss. Let's go next. Let's find some more pattern. This is a trend continuation pattern, you can see that. This is also a trend continuation pattern. We are looking only at a reversal or consolidations. Skip the patterns that are reversals. Well, here we have a pattern, and let me check it. If I draw it from here to here, you see that it is a bad pattern, but not godly. Okay, but I had to check it. No, nothing valid, nothing. Okay, a reversal. Yes, but never completed. Going next, continuation pattern. It will be pretty fast. Okay, here it is. We have no, the previous movement should be larger than XA, so this is not the pattern that we are looking at. Continuation pattern. This one is invalidated. Okay, here we have the downtrend, and then we have that pattern. And let me look at this pattern, just check it manually, and it turns into a bat. Now we are talking about Gartleys today, so let's only think about Gartleys. No continuation, no reversal, it is a continuation. Here not enough, no, nothing. Very many patterns will be skipped. Okay, we have the downtrend, yes, obviously it is more than this Gartleys XA leg. Let me draw it, and it is a bat. No, nothing valid. Look at this downtrend, we skip this bearish, and this bull pattern is the one that I'm looking at. Trade 2 and then go to stop loss. It is -0. Going next, this one is a reversal, but it is what? We had that spike to the downside, but not enough to hit the trade 2. It is minus. Okay, this bearish is not good. This bullish one is obviously a winner. It is a reversal. We had a downtrend before that, and then it reversed. You see, downtrend and then bullish Gartley. Nothing here. The movement prior to XA is not larger than that. Going next, continuations. Nothing here. Well, maybe this one. The movement prior to XA should be larger, or at least equals. No, it is smaller. Nothing. No, this pattern is good, but it didn't trigger. It is good, but it didn't trigger. This one is good, but it's not on the top. Let us see if it fits the rules, if placed to the top. Yes, it fits the rules, and it hit that. 618 winner. Go to plus. Let us continue. Next, nothing here. Look at this. This is a reversal pattern, but the bottom is that, the actual bottom. So we should draw the pattern from here to here. It is a bat. This time it turns into a bat. Okay, this bearish pattern is obvious winner. This bull pattern never triggered, and this second bull pattern is a trade 2 winner, I suppose, because it came back. Yes, it hit trade 2, then came back to the entry. It should be -0. And now let's go next. It is a continuation. Continuation pattern. We will skip many patterns. Okay, nothing. Nothing. This one is a loss. We had a downside, and then we have that bullish pattern. It is a loss. Going next, never complete here. Continuation. Okay, look at this continuation pattern. Didn't trigger. Oh, sorry, it is a continuation. That one was invalidated. Continuation, nothing. What about this? The prior movement is not larger than XA. Okay, this one is good. From here to here, let me draw it. It is a Gartley pattern, and this movement is good to hit some targets. Let's calculate what type of target it is. Trade 2 and then go to stop loss. It is -0. Okay, bullish pattern is not our case, but this bearish is obvious winner of 618. And going next, this Gartley, you can see it here. Let me draw and match the highest high of this, and you see the Gartley is still valid even if we match the highest high, so it is plus. Let's go next, this movement larger than XA, so we have plus. Then going next, invalidated C point, never complete. This small pattern, look at this one, we have downside movement followed by this small pattern. Let me see if it hits stop loss. I don't think it hit stop loss, but still, let me see. It didn't hit stop loss, you can see, and then it goes to 618. Then what we have next, this bearish was invalidated, this one is not good, continuation, this one is a reversal one, and it hits something, maybe trade 2 only, yes, trade 2 only, and then let's go type that, it is -0. Let me go next, this one never complete, bearish never complete, this bullish one. The bull patterns, we have downside movement, decline that is higher than XA, this is the movement, and let's see if it hits trade 2. Yes, it hits trade 2 before it hits stop loss. We're taking the larger. We have 2 of them drawn, but we have to take the larger. It hits trade 2. Okay, another one, this bullish is a stop loss. It is a stop loss, larger. Okay, we have to first let's calculate that larger goes here, then the C point goes here exceeding that, and then it goes here. Let us see if it hit the target. No, trade 2 was not hit, that's why it is a loss. Oh, sorry. Then let us look at some minor patterns. First of all, we have this upside movement, and then we follow by this Gartley pattern. You see its completion point is here, projected there. Let us stretch the fibs, so the Gartley's pattern is here, and we see it hits 618. Okay, let's calculate another. We have that movement to the downside, and then we have that bullish Gartley, and it didn't complete. We have 2 variations of them, now they will not complete. Then we have this upside movement, and then we have these bearish variations, bearish Gartleys, and they go and hit to trade 2. See that? Oh, sorry, to 618. 3 the large movements. Okay, and finally we have this Gartley, reversal Gartley. We have this, and that's reversal, double top. Obviously, it drops towards the targets. Good. Going next, this one is a reversal, so this one didn't trigger, this one not reversal, not reversal. Okay, zoom it in, this one is a reversal, but it was a stop loss, so minus on that. This one is a continuation, but that on the top is a reversal, and it is a 618 plus 618. Okay, let me release some RAM. 54668 indicators. Instead of analyzing all the bars, let's analyze only 54668. 54,000 bars. Control C. Okay. Okay. Control V. Okay. 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 And another one. Okay. Okay, good. Okay, this is the bearish. It is still there. These two bearish patterns are continuation. They are not reversal. This one doesn't go. This one didn't complete, and the largest bearish is a stop loss. Okay, going next. Nothing here. We're looking at the bullish patterns in a downtrend and the bearish patterns in an uptrend. Nothing. Bearish pattern, bullish in a downtrend is a winner. A reversal. And this bearish may be enough to hit 382, maybe not. Not enough to hit 382, it is a loss. Okay, perfect. Going next. What is this? Wonderful situation. It shows pretty good. We have uptrend and then boom, peep to peep reversal. Plus. You see, starting from this, boom, 618 obviously. And this one didn't trigger. This not good, not good. Nothing. What is this pattern? What if I draw it this way, starting from here and here? It turns into a bat. This not good, not good. Need to be bearish. Nothing. Nothing. Okay, what was the prior movement? It was uptrend. No good. Invalidated C point. Nothing. Nothing. Okay, this was prior movement exceeding X. Yes, this is the X to A. This is the movement, and it doesn't hit 618, I suppose. No, it doesn't. 382, then come back to entry. It is +0. Why it is +0? Because it further went to 618, but we were away from this trade. Okay, previous downside movement, then we have this Gartley, and then this spike and reverse, 618 winner. You can call it a consolidation pattern. It is also good. A pattern that found in consolidation. Okay, this movement should exceed XA leg, but it doesn't. Skip it. This movement prior exceeding XA, so let's draw the pattern this way, from here to here, a new pattern, and you can see that it doesn't hit 382, almost hit 382, but no, and then it exceeds and goes to stop loss. Minus. Let us go next. Okay, nothing. October 2012, 2013. So 14 years back tested. 5 years left. Oh, October 2014 already, 4 years left. Well, yes, on this 1 hour time frame we had to skip many patterns. Look at this textbook example. Spiking through 61A and then going, oh, 50, not 61A, 50, and then go to break even and then go to 61A once again. It is +0. No valid, no reversal. This one is a good reversal here, but we have to draw it here. You can see it, a waterfall. Obvious 61A. This one pretty good. It is a consolidation pattern. Prior movement is larger than XA and it goes higher. We have plus. No good. This one is found in the bottom, yes, so well, it is a loss. No good here. No good here. No good this. This smaller is a perfect. No, it is a trend continuation. Okay, this in this movement. Look at the price section. We hit the entry and then we spike through that and then we go back. It is a winner. Perfect. Then this bearish is not our case, but this bullish is the one we are looking at. Movement is larger than XA, then this, and a reversal. It should be marked as plus. Going next. Okay, what we have here? Prior movement, and then we have this bearish. Only bearish is valid. Bullish should be skipped. Straight to only. It is -0. Next, what is the next pattern? This bearish, we should take the largest, of course. Okay, the largest, say, touch and reverse. Let us see if it was triggered on the first touch. Well, it didn't trigger on the first touch, but on the second it obviously triggered. Touch in reverse plus a pattern is a winner. Not our case. This didn't trigger. Not our pattern. Okay, here we have that upside movement, then followed by this. When we have two algorithms pointing almost at the same level, take the largest. Take the largest. Don't take both of them, only take the largest. And the largest triggers somewhere here, higher than this largest. We don't have the 3-2, so it is a loss. Then let's go to the next one, and it is obvious winner. But what is this winner? It is 3-2, go back to break even and then to 61A. It is +0. Avoided winner. So we have 2016, very close to present date. We have this upside movement. Look at this. You may skip this. Yes, we have that upside movement and then followed by this bearish Gartley. Okay, it triggered 382, and then to stop loss it is -0. Then let's go next. This larger pattern is not our case. The previous movement should be larger than XA leg. The previous movement, this one is short, not large. Okay, prior movement is pretty good, and it is a loss. Let's go next. Okay, that's it. Let's do the calculations. So how many patterns we have? We have 41. Go in here. Let's do this. Total. We skipped many patterns. Then we should have winners. We should have losses. We should have percent win. We should have percent loss, and then we should calculate the expectancy. Okay, this is very needed to know if the strategy is losing money or generating money. Then we will have max win, and we will have min win, and then we will have average win. Okay, what is this first strategy? It is a 382 only. We set our targets to 382 only. So total trades is 41. Yes. Let us filter the losses. If we use the 382, this is a loss, this is a winner, and a winner. 0 means that it touched 382. Yes. Well, I need to calculate it from here to here. 31. We have 31 winners. Select all. Let me insert that. Okay, 31 winners. So the losses should be calculated this way. It equals winners total minus winners. Okay, 10 losses. The percentage is calculated this way. It is equals number of winners divided total. So the accuracy is 75%, and the losses equals this way. Losses divided total as well. So we have 24%. Let's turn that into percentage. Okay, and let me do it this way. Turn this all into percentage. Let me remake the filter. Okay, good. What is next? The next strategy is 618 strategy. 618 strategy. Okay, so what is the winner using 618? Suppose we don't use break evening. Yes, so if it is minus, it is a loss, not avoided loss, and if it is minus, it is a loss as well. So we only have this, the same amount of trades but less winners. What is this? Oh yes, okay, 23. We have 23 winners if using 618 target. 23 winners. Oh, sorry, 41 winners, but 41 total, 23 winners. It equals this, the same. Okay, it is 56% probability. And now let's calculate this strategy. What is 61? 61, yes, plus break even. You can see that 61 plus break even. What this strategy will bring us, what it will give us. So if it hits 0, it means that we didn't have a trade. Yes, we placed that, but the outcome was 0, and overall it's the same as having nothing. Just pay the commission, but it's not the trade. So total we have this, plus and minus. That's why we did those calculations with zeros. The amount of total trades is 31 trades. Let me show them. 31 total. And what is the amount of winners? And of course the winners are only those zeros. We don't have zeros but only pluses. So what are those? Number 20. Okay, 20. Pretty good number. And let me do it this way. Okay, 11 winners, 64% if we do the break even. You see that? What is the accuracy of this strategy? 75% to hit rate 2, 75.6. Well, outstanding. Almost the same what was Gartley talking about. The Gartley, let me remind you what Gartley was talking about. Let me open the book once again. The 1043, let me type that. This is the page. Yes, blah 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 blah. In 8 out of 10 cases wherein each of these specific conditions occur, a rally which will provide a worthwhile profit ensues. In 8 of 10, 80%, the Gartley says about 80%. And if you trade the Gartley patterns as reversal patterns, you have 75%. Okay, that's pretty good. The number of trades not that very large as sample size. It is less than 100. So it may slightly deviate to 80 or maybe to 70, but it will stay somewhere around this, from 70 to 80. I bet it stays somewhere within this range. If it is 382 target. Okay, let's do the calculations. What are our risk to rewards? Let us find some Gartley. Let me draw some Gartley. Why should we find any? To A to B to C to D. Okay, this is a Gartley. So the best risk to reward we have is when price reverses exactly at this point. Yes, that exactly at the point that we predicted. So in this case we generate 63.4 and we're risking only 50.4. So if we divide this 63.4 divide by 50 and 4, it equals 1.25. I will tell you the truth. The correct calculation says that it is 1.23, a bit less, but it doesn't matter. Let me delete some of those indicators. I don't need to have so many running because we already did the work. Okay, and what is the worst case scenario? Yes, the worst case scenario when the reversal takes place here at the stop loss level, but it doesn't hit stop loss, let's say 1 fraction of a pip, and in this case our target becomes very small, 31.7, sorry, 31.7 divided by 50.04, the minimum says 0.62. And again, guys, I will reveal you a secret. It is 0.618. So revealing a secret here. So what is the average win if compared to a loss? Average win if compared to a loss. It equals average of these two. Oh, sorry. It equals average of these two numbers. So it is 0.92.4. Okay, now let's calculate this. What is the 1618? And I will reveal you a secret. The largest amount of 1618 target, yes, is 2, because the stop loss was set as half of 618 winner. It is half of 618. And here I will also tell you that it is 1.618. 1.618. So if you don't believe me, we can calculate it here. towards 61A. Yes, 8029 divided 5004 as our thing. You can calculate it without me. The 8 is Fibonacci number and 5 is Fibonacci number. So 80 and 50 is Fibonacci numbers. So it is 0.64, but if we calculate precise, it is 1.618. 1.618 is that. So this is the average of it. And in the third strategy approach, yes, it is the same, 2.618, because we are looking to 618 target. So what is the expectancy? Let me calculate the expectancy. The expectancy is the mathematical calculations of what I am to expect on each and every trade. Some trades are losers, some trades are winners, but what I generate on average on every trade, on average on every trade. And it is calculated this way. Expectancy is percent of win multiplied your average win minus percent of loss multiplied your average loss. Well, if we calculate our average loss as 1 and our average is win as 0.92 of that 1, so it is should be 1, be it a percent, be it whatever. So 0.4547 is the average return. On each and every trade, on average, we generate 0.45 of what we were risking. If we were risking $1, then we generate 0.45 cents back on each and every trade on average. And if we were risking 1% of our account, so then we will generate 0.45 of that percent. If we were risking, let's say 2%, 3%, so we generate 0.45 of those 2%, so of those 3%, and so on and so forth. So let me calculate this, and you will see that the expectancy of 618 is larger. It is 0.57, and the expectancy of the combination of them, 618 plus break-even, is 0.81. You see that? Using this strategy, you generate almost the same as your risk. It is pretty cool. 0.81 is a very good expectancy. If we compare the strategy with the Richard Dennis strategy, he had a risk to reward of almost 1 to 6, but because his accuracy was not very good, his expectancy was about 0.65. Richard Dennis is the founder and the creator of those turtle strategy. He brought up those turtle traders and he taught them how to trade. So the Gartley pattern, if it is traded correctly, and if it is very, very wonderful strategy. You see that? So I don't believe the guys that are saying, you know, those harmonics don't work and blah blah blah. Maybe harmonics don't work in sense that they are traded this today. In the sense, in the way they are traded today, only relying on 618 ratio and other ratios, maybe they don't work this way. And I actually don't care. What I'm looking at the structure that was explained by Harold Gartley, and I trust Harold Gartley more than I may trust to Scott Carney or to Jason Stapleton or to whatever. So I created my software, and my software says, you know what? If we trade based on simply ratios, we have this results on Gartleys. Let's go to Gartleys. Dollar Canadian, 1 hour. If we trade simply based on ratios, we have this result: 72 trades, 44% accurate. Is that enough to make some money? Well, maybe if your winner is larger than that. But this result says the 44% to hit 382. This is the 44% to hit 382. It is not enough. It is. It will be losing. The expectancy will be a loss. The expectancy will be negative. 44%. And look some other pairs. The Gartleys 50%. Yes. Well, what is this? Sometimes it is good. 65, 53, 46% Gartley. Yes. So it is. The Gartley is not the best strategy until it is optimized. And why it is so? Because traders simply relying on ratios, taking every pattern, taking every Gartley. But as I say it on my website, guys, this video is simply a demonstration of what it is. As I say it on my website, go to www.ps-software.net, go there. Okay, once it is loading, we will continue. The standard rule says that we use two positions. One of them is hitting 382, another one is hitting 618, and when the first one is hit, we should break even that. So this means that we have two strategies combined. You see that? The first one is hitting 382 and the second one hitting 618 plus break even. So if you calculate it this way, what is the total outcome? Is this plus this. The expectancy equals 1.26 of what we were risking combined together, 382 and 618. So if we were risking 1%, this means 0.5% on first half, 0.5% on second half. Yes, so this is 1.26 of that percent that we were risking on each and every trade. 1.26, well, enormous. Suppose you have 20 trades a month. Yes, so your monthly result will be this. This is average winner on every trade. Yes, multiplied 25%. It is amazing. I just can't have some words. If you go to learn the patterns tab, yes, well, you are to register here on my website to get free videos, to get learn the patterns working here. I'm not offering you some stuff that I'm not spamming you. You will be notified when my new free video appears, and you will be notified when I have some promos and so on. That's it. So if you go here, you see the diagrams, the prior movement exceeding that. You see the diagrams. It is very important. It's not arbitrary diagrams. And if you click on the diagram and you have the description, advanced formation identification, Gartley tactics, okay. If you go to description, the Gartley advanced formation starts from our impulse leg. No, it's not that. Maybe harmonic pattern. Fibonacci extension. Okay, seek to identify. Here it is. M type should appear in the bottom of a downtrend, and W type should appear in the top of an uptrend. The same with advanced formation. I just didn't notice that. Just forgot about that. If we go to advanced formation, there is the same statement on every. You should read it carefully. M type, you see? M type should appear in the bottom of a downtrend, and W type should appear in the bottom of an uptrend. This means that M type is actually a double bottom and W type is actually a double top. That's it. Pretty simple. Two sentences that turn everything upside down. Only two sentences. You don't even need to rule all that stuff that goes after that, all those explanations, how to identify the pattern. You don't even need to know that. You should just read two most important sentences. Maybe I need to mark them in a bold letters. Okay, well, that's it about Gartley. You just saw how the results were improved simply taking the Gartleys that are reversals rather than those that are continuations, and it is based on the logical approach. If you know how to read the price chart, why should you trade all those Gartleys? No, don't rely simply on ratios. Rely on understanding of the market behavior, of understanding on the market structure. Well, if you find this video useful, you are welcome to hit that like button, subscribe to my next episodes, comment below, share this video on social media. Well, until then, plan your trade, trade your plan. I'll see you soon.